go on. I haven't seen the red dot go on. Yeah, there we go. We're recording now. Okay. All right. So this is the book that what I'm talking about when I say, do you have the paper copy? Those of you who aren't in Canada, this is not going to be a book you want to have shipped to you. Look, you can see that's how big it is, right? So it's like the one upside that you guys should be aware of, that you don't have to be on campus, is most of the time everybody came to class with all three of these books and they weigh a ton. So you were breaking your back getting to class. So this is the Income Tax Act. Now my concern, one of my concerns, and so what I already have thought about this a little bit, what I will be doing is making copies of these pages and posting them so that you have access to them. The Income Tax Act that we've looked at online that I showed you is obviously the act. The law is the law. It doesn't matter who the publisher is. This publisher happens to be the same publisher as your textbook. Now, what happens is when the publishers do these things, they add material like what we were looking at online for the that you can use that's definitely accessible and I'll refer to in class because it's easier than fooling around with this book, is the law, and that doesn't change, but publishers add things. So you'll notice that it says annotated. What that means is the publisher, Wolters Kluwer, have added material to this act to help you, to help anybody using the act. And among other things, some of the stuff they've added is a whole bunch of stuff. I want to get this less. Okay, there we go. At the beginning. So they've got a bunch of tables. So they've got like tables on non-refundable personal credits. You won't need that for our class. I won't be sending you this because that you'll need in Tax 2. Hopefully by then we're on campus. Tax rates. I mean, there's just a ton of stuff in here. Quebec tax rates, we don't care. Provincial health. So there's just a ton of stuff in here. You will need for our course this little chart down here that says registered pension plan contribution limits. Again, this is not in that online act. This is part of that annotated that the publishers have done. So what I will do, those of you who have the paper act already have this, so you might want to find it and tab it at the front there. For the rest of you, I will make a copy of this. And so from that standpoint, those of you who even have the paper act, you can use the copy I make. But you do not write extra material on that. So similarly, you're going to need these mileage rates and meal allowances. You're going to need these automobile rates and limits. So all this material is in your textbook, but you're not allowed to use your textbook during exams. You're allowed to use the Income Tax Act during exams. So I want you to have access to these kind of helpful charts. There's a chart, this we will get to, I can't remember whether it's before or after the midterm, but in any case, this is how we do tax depreciation. All right, it's called capital cost allowance in tax, but it's depreciation. And by the way, let me warn you, don't ever use the word value if you're talking to me about depreciation. Got nothing to do with value. Okay. And then we get to this sectional list of the Income Tax Act. This is online. Like if we look at, I'll go back to the online view. Okay, this essentially is the same thing. All right, so you've got in your act, it's here in the front. Online, it's here, and it's just that it's clickable here. It's not clickable in this book. All right. So it's not a bad idea to familiarize yourself with this. I'm not going to photocopy this and send it to you. It's there online. You can look at it. You won't necessarily use it that much, but what I like to do with it, and this will come later, I think, for you before you'd want to, I like to just almost read through it because it highlights, oh, there's something about parking. You know, there's something about automobile sales costs. There's something about some definitions here. So it's just kind of fun sometimes to just look through it and be aware that there's all the different things. I mean, the list of the Income Tax Act sections, let me go zoom out again here. Okay, so if we look, this table of contents, so to speak, oh, there we go, is a substantial, that's just the table of contents that I'm flipping through there. So it's a substantial thing when we look at the table of contents. All right, so I will send you for sure these pages that I want you to have from the front part. And then I think what I'll do is send you these other pages as well. We'll see. I'll tell you as I go. So what I want to talk briefly about first is, so what we're dealing with here is there's a body of tax law that exists, the actual Income Tax Act, that is the law itself. But then the courts might speak to issues if there's some ambiguities, things that aren't clear. I mean, you can't write any law for everything. It just doesn't work. So the courts get involved on occasion with various issues. Tax treaties, these are agreements, typically bilateral, sometimes multilateral, between two countries on how to resolve conflicts. Looking at residency for next week and problems with residency, well, it's not uncommon that someone might, or some company might, be treated as resident both in the United States and in Canada, or in India and Canada, or China and Canada. Like, to have residency rules domestically in each individual national jurisdiction that wind up with a person being resident in 5 countries. Well, that's what these treaties do, is they resolve issues like that. Okay, it was, remember when I talked about vessels, that was an issue with a tax treaty, an agreement about how you treat a vessel and what's a vessel. There's regulations, those provide just detailed information. We'll talk about them a little bit, but not extensively. And then you've got your legislative history and explanatory notes, and those can be helpful. And in the Act, the paper Act, and this is why I want to, give you some, give you copies of this instead of what's online, because this stuff isn't online. You get these editorial notes, you get legislative history, you get some cases where they say, like, things that have been argued about. So the different pieces of legislative history and information that can be very useful is in this publisher's book. So that's one of the reasons I'm going to want to send you the papers. Then you also get basically these last 3, ITs, ICs, and ATRs, are CRA interpretations. This is what CRA thinks the law means. And I recommend that you go and find the folios. And again, all you have to do, I've got it here somewhere, is Google CRA tax folios. And I hope it works. So you Google CRA tax folios. I like to get the index. And so you now got a tax folio index. And we have the different groupings, individuals, employers, employees. And then there is specific details, like for students or for health and medical, personal credits, etc. All right, Linda?
Yeah, Professor, please, what's tax folio?
Sorry?
What's a tax folio?
It's a CRA interpretation of what the law means.
Okay, thank you.
Okay, so these last 3, this is slide 15 in the introductory slides that I'm looking at right here, slide 15. And these last 3, the ITs, the tax folios, ICs, and ATRs, are CRA interpretations of what the Income Tax Act means. Because the problem you're into, and we're going to actually refer to some CRA material as soon as we start employment income, because when we look at employment income, we're going to find that, not surprisingly, everything that you might get connected to your employer or benefit you might enjoy they're going to tax it. Again, back to that, do they want to tax everything? Sure. All right. Well, then you get into things, well, what about if the company gives you a coffee mug with the company logo on it? Well, is that taxable? Technically, yes, but give me a break. Like, this is ridiculous. They give you a t-shirt, like, right? So what CRA does is come along and say, well, all right, here's how we're going to apply this law. What we're going to do is say, all right, like stuff like, they put the company logo on it and gave it to you. No, we're not going to tax that. They give you a gift under 500. We're not going to tax that, stuff like that, non-cash, right? So that's where we'll go to these folios, because the law just says benefit of any kind, whatever. Well, okay. I would argue it's not a benefit because it's just cluttering my house and I don't want stuff with Brock's name on it, but you can debate that, right? And it's certainly not worth the bother. It costs them $1.25, right? So that's where we'll turn to a lot of these folios, where they'll give more detail. The other thing the folios do, when I say it's the CRA interpretation, the other thing the folios do that's useful is try to put the law into common language. Again, back to this, what do the words mean? What are we talking about? They try to make it more user-friendly. And again, though, even CRA, back to that problem we had with CRA implementing the CERB and saying income, that they've used a word that they think is clear that isn't clear. So we always have issues like that. But that's part of what they're there for as well, is to help kind of put the law into usable language for the average person. Okay. All right, so let's see. So that's the groups of law. Now, the people that create the law, the Department of Finance is where you get the legislation originating, and then it goes to the Parliament and they pass it and so forth and so on. The Department of National Revenue, this is where CRA falls. That's the administration of the law. And then the Department of Justice, that's where we get the court cases and the litigation anytime there's an argument about the law, which is what we'll see. In terms of using it then, what we want to, this is where I was talking about, you recognize issues, you ask the questions, get the facts. Then when we get to the statute and start actually using the statute, we have to assume it means what it says. Because again, we get into problems here. So when we say it means what it says, well, how do we know, exactly what's going on? How do we define our terms? There's two ways: statutory common usage. Okay, statutory is when it's in the law. So I'm referring to section 248 here. This is slide 17 in the introductory slides. All right. Section 248, if we go in the law, that's what I'm talking about. And if you look, it's hard for this to, I'm going to show you I've photocopied some slides already, or some pages, so that it's not as hard to move this book around. At the bottom of the act, you see section, oh, here, let me get that clearer for you. Section 2 sub 1, this is if you're using the Paper Act. Oh, and then I didn't photocopy it very well. Yeah. Section 123, etc. All right, those are the references to the details of the law. That's always at the bottom of the page. If you're using the online version, that's what these numbers are, is there's section 2, section 3, section 5, 6, 8, etc. Right, so you can find it through the index if you're using the online version, and then it will be in the margin in bold. So section 3, this is section 2, and then the parentheses is sub 1. So this is section 2, sub 1, and then 3, sub 1, sub 2, sub 3, and then you go to 3A, etc. So, and it's indented and so forth. So those are the two ways that you'll see if you're using the Paper Act versus the I'm going to get this out of the way for a second, versus the Online Act. All right. So what we look for, oh, I needed it. Sorry, I was looking for section 248. So I'm going to go back and find at the bottom there, section 248. And section 248 is part 17. The act has various parts. Part 1, and we'll look at that in a few minutes, is the income tax, the rules about the income tax itself. And then it's got various other parts that we'll look at. But part 17 is interpretation. And that's helping us mainly with things like definitions. So section 248 says, in this act, all right, that means the definitions in this section, and then sub 1 act, and then it's all just alphabetical. You see there's just a whole bunch of definitions. All right. These definitions apply for this entire book. All right. That's as opposed to, if we go to, I think it's section 125, let's try that. Oh, I tore those sections out. I've got them over here. Oh, geez. Those should be right here then. Come on. I have to get a different act. Okay, yeah, here we go. If we look at section 125, and you don't need to know what section 125 is, I just want you to see that what 125 says, and I can't turn this differently, so I'm sorry, but let's try. There we go. All right. 125 says definitions, but it says in this section. All right, so 248 said in this act. That meant it applied to everything. The definitions here apply only to what you're dealing with in section 125. You won't use 125 this term, you'll use it next term. All right, so that's in this section. So that's one place that you find what the words mean that you need to know. So that's one of the places when we say find what the words mean in this act, sometimes in this subdivision, some will be in this section. Okay, sometimes it'll say, okay, 248 says taxable Canadian corporation definition, and it'll send you to section 89. What that's going to mean then, section 89 will say in this section, here's a definition. But because 248 references it, it applies to the entire act. So this, it's the process you go through. Now, what you want to realize is that if it's not defined in the act, and a lot of things aren't, okay, then you go to common usage. Common usage is, you know, accounting to a considerable extent, but it comes from economics, finance, accounting, wherever it happens to be particularly relevant. All right. So that's kind of the first process you go through in terms of what do the words mean, how do you sort this out, things of that nature. Now, in terms of the words, though, then you got to start being careful that you pay very close attention to what these words, the difference between, oh, for goodness sake, certain types of words. All right. So if the law says this blah, blah, blah means something, that's very restrictive. All right, that it says, okay, here's what it means, period. This is it. Versus if it says includes. That's not restrictive. So if it says means, that means whatever is listed there, that's it. If it says includes, then whatever's listed there counts, but there could be other things out there. So it's not restrictive. You see the difference, may as opposed to shall. May means the taxpayer has a choice. Okay, they can do it or not. The thing will say you may take CCA, tax depreciation, but you don't have to. Shall, there's no choice. You have to do it. All right. You see things like and versus or. Pay attention. Okay. So you have to be very meticulous as you're reading the law. You can't be sloppy about it. Okay. So you have to be very, very careful about reading the law. Okay. Notice least of versus lesser of. All right. For least of, you're going to have more than two. Let's go to another page. So if the law says least of, you look for more than two things. If the law says lesser of, then you look for two things. Okay. If it says exceeds, you subtract. Okay. I mean, so that you have to get into the rhythm of it. All right. So where you always want to start when you're using the law, you start with something known as a charging provision. If you look at my old tests and my old quizzes, you'll find I almost always ask you what a charging provision is and why it matters. And I'm sorry, Joanne, if I don't see your hand, just unmute and interrupt me, okay? Because otherwise I'll get too far past. Joanne?
Yeah, thank you, Professor. I wanted you to explain more on what you meant by least of, looking for more than two things, I think.
Okay, let me just get a piece of the act. I should be able to find it. Oh. So let's see, least of, lesser of. Where am I? I know a place I'll find a least of. I'm trying to think of where I'm going to find a lesser of. Ah, I know where. Okay, so. Okay, yep, I ripped those pages out. So let me see if I've got them here. Okay. All right. So in this one, and you won't need to know this term, but it's a place where I can show you. All right. So we say there shall be added. This is section 123.3, but again, you don't need to know this section. This will be next term, you'll need this section. And Joanne, you can put your hand down now, okay? There shall be added the tax otherwise payable, private corporation, amount equal to 10 2/3 of the lesser of. That means you look for an A and a B. Two things. So the lesser of this and this. Because lesser is a two-thing word. If we compare that to section 125, here it says multiplied by the least of. Well, that means I need to find an A. Ah, shoot, I don't have the full 125 there. Let me get it. Okay, here we go. We need to find the A. So there's an A. So 1A. Then it goes to another page. B, C. If it says least of, you stop reading till you find at least three things. And then you, so it's going to be those in the margin things. So least of will have more than two. In this case, it has three, an A, a B, and a C. There might be places where it has four or whatever. So a least of will always have more than two things. So what I'm saying here is that when you're seeing this lesser of versus least of, you don't want to start actually sorting out the details of the law until you find the two or the more than two, because you want to find that A, B, or the A, B, C, D, whatever, before you start actually sorting it out, because you want to make sure you don't miss any pieces. Okay, does that help, Joanne?
Yes, Professor, thank you.
Okay, good. All right. Okay, so this charging provision thing, and again, so jump in, because the problem is I've got two monitors. So the monitor where I can see that you've raised your hand is to my right. The monitor where I can see what I'm telling you is on my left. So if I'm looking at the monitor where I can see what I'm saying to you, then I won't see you raise your hand. So just unmute and jump in before I get too far ahead of you. All right, so this charging provision, I should write more clearly, shouldn't I? CHARGING provision. And I was just saying that I always ask about the charging provision. It's one of my guaranteed questions somewhere typically. And that's because, in my opinion, it's so important. It's that the charging provision tells you who does this apply to. All right. So it can be a very broad situation or it can be narrow. Right. So if we look at the Canadian Income Tax Act, so part 1, remember I said there's a number of parts. If you look at the table of contents, you'll see all these different parts. Let me show you a little bit. So we have part 1, then you have, say, part X.3, which is relates to venture capital corporations. X.4 relates to registered education savings plan. So there's all these different parts. Part 1 is by far the biggest. It's the income tax. All right. So I want to know who this applies to. Well, what it says is income tax paid on the taxable income for each taxation year of every person resident in Canada at any time in the year. That's a charging provision. That's telling you who it applies to. So what this says is if you're a person, so now I'm going to have to look up words again, right? The first place I'll look is in section 248, that section about definitions. What's a person? We find that a person, by the way, includes a corporation. All right. Taxable income, resident. We need to know what a resident is. So again, we have this sequence of things we have to look up. But as far as the charging provision goes, this says that if you're resident, so you as individuals, if you are resident in Canada, you are taxable in Canada on your taxable income. That's a charging provision. Who's subject to tax? Now, what's interesting about this is that would suggest that if you are not resident in Canada, you don't have to pay tax in Canada. Do you think that's true? Like, let's talk about an individual. This is developing that sense of how law works. Individual works in St. Catharines. This is actually not uncommon, and for some of your professors. Works at Brock, lives in Buffalo, United States. Buffalo, New York. Okay. If I look at this charging provision, this provision that tells me who is subject to income tax in Canada, that person is not resident. Okay, they are not resident in Canada. They live in Buffalo, and you'll see as you study residency that if they truly live in Buffalo, they're not resident in Canada. So that means they're not subject to tax in Canada. Do you think that's true? Somebody jump in there. Tell me what you think.
No, I think somewhere there will be another provision for
workers who do not live in Canada but work in Canada.
So you're suggesting that, back to our discussion in that video I made about tax theory, that since Canada wants to raise revenue, which means they want to tax you, and you're working here, you think they have a right to tax you, and they will, right?
Yes,
That's what you're
Professor.
saying, Linda, right?
Yes, Professor.
And I think you're absolutely right. So this is what I mean again about developing that about thinking tax. You know that Canada wants to raise revenue, they want to tax you. Can they justify it? And if they can, you're going to look for that charging provision. Well, if I look at section 2 sub 3, some of you have already done this because you've done your homework for next week. We have tax payable by non-residents. Person who is not taxable under subsection 1. This is subsection 1. Is taxable if they're employed in Canada, carried on business in Canada, sold property, right? So exactly what you would expect to see is there. You could have predicted that. You could have written it, all right? So that's also a charging provision that says, okay, so resident, and then we have non-resident. Well, but wait a minute. The non-resident stuff is employed in Canada, carry on business in Canada, sell what I'm going to call taxable Canadian property, if you read it. Okay, well, but what if I have a US person, oops, sorry, that bought a bond issued by Canadian Tire, a Canadian company. So the US person receives interest income from Canadian Tire. Does Canada tax that interest? The US person is not resident in Canada. They're not carrying on business in Canada. They're not physically here at all. Is Canada going to tax the interest? What do you guys think? Okay, what did we just say? Canada wants to raise revenue. So they want to tax. Can they? Do you think that there's a reasonable connection?
I think there is, Professor.
I think so too, right? Like, I mean, it's where's the source of the interest? It's Canadian, right? Canadian Tire is going to deduct that interest expense, right? So don't you think that Canada wants to tax it? I mean, again, that sense of how does the law work? Well, they certainly want to. Can they means, can I get a close enough connection? It's called nexus. Is there an adequate connection to be allowed to tax? All right. So that connection would be what you'd look for. And the connection in this case would be the source. It's a Canadian source. But let's go back and look at section 2 sub 3. Employed in Canada, carried on business in Canada, disposed of taxable Canadian property. Does that say anything about interest? No, it doesn't. So what are you going to predict, Linda?
I think there'll be another charging provision somewhere.
There'll be something somewhere, right?
Yes.
That picks this up. Exactly. And then so you look for it. Like you're like, I know that's going to be out there. So you look for it. And what you find is this is another part. Part 13, tax on income from Canada of a non-resident. every non-resident person shall pay a tax of 25% on every amount that a person resident in Canada, i.e. Canadian Tire, pays or credits or is deemed to pay to the non-resident on account of, in lieu of, in payment of, satisfaction of, etc. And then there's a big long list. Management fees, interest, estate or trust income, somewhere there's dividends, rents, royalties, etc. What's the difference? The difference is passive income versus active income. The difference is somebody physically here? So, if they're employed here, they're physically here. If they don't pay their taxes, the government can come grab them. Okay, they can, hold back their wages, whatever. So what happens here, the difference is that because the person's not physically here, rents, royalties, dividends, interest, all that sort of thing, it's the Canadian resident that sends the money to the government. Then the non-resident that receives the interest, if the tax is too high, they can file a tax return and ask for the money back, but the initial payment gets made, and it's also only on gross income. Part 1 allows for deductions. Part 13 does not. This is on the amount paid. And again, part of this is because what deductions would there be for interest? Okay, so forth and so on. Now, this is where one of the places where the treaties come in. This tax withholding is required at 25%. This is where, whether it's with Canada, with China, US, UK, India, Pakistan, wherever, that rate is typically lowered. Between Canada and the US, the rate is 0, all right, for interest, not everything. But so that's where you go to the tax treaties. One of the things tax treaties do is lower that rate. So this is another charging provision, and it's the charging provision that we would predict would be there. You see, it gets more detailed. When I say it could, that's the broad level charging provisions, but it gets more detailed. We looked briefly at this section 123 in terms of the lesser of. The reason I pulled this out is because section 123 applies to a Canadian controlled private corporation. That's a charging provision. If you're not dealing with a Canadian controlled private corporation, you stop reading. This doesn't apply to you. That's why it matters. Okay, it matters because if it doesn't apply to you, you don't want to waste my time and money if you're working for me reading the thing, right? So it's critical to know whether or not a particular piece of the law is relevant to what you're doing. And I always, to reinforce this point, want to tell the story. When I was working at one point, when I was dealing with clients, I do both teaching and consulting. Haven't done that very much recently, but that's not uncommon. My specialty area is international corporate tax, in particular, Canadian companies doing business in the United States. I wrote a book about it. And one situation that I had a client that the Canadian company, so Canco, and when I draw pictures, anything that's rectangular is a corporation, anything that's circular is not an incorporation. So you have shareholders, circles, individuals. Canco is an incorporated. And Canco had owned stock in Brasilco, whatever, I don't remember exactly, Brazil company, and got a dividend. All right. Now, as it happens under Canadian tax law, there's something called the foreign affiliate rules. All right. And the foreign affiliate rules may apply if you get a dividend from a foreign country, from a foreign company. All right. These rules are incredibly complicated. They're very difficult to deal with. And I had a staff member that was doing a tax return that historically we had done this tax return for about $1,500. It was a relatively small company, relatively straightforward. Canco wasn't a big deal. I'm looking at the run. And when I say the run, it's the detailed listing of how much time people have invested in preparing the tax return. And my staff had $8,000. Time invested. And I'm like, what in the heck is going on? So I call him in and he says, oh, I've been dealing with the foreign affiliate rules. Okay, like why? Because the foreign affiliate rules only apply the charging provision. And it's more complicated than this, but simplistically, you got to own more than 10% of the stock. So I said to my staff, how much stock do we own? And he said, I don't know. And I said, deep breath, why don't you check? Like 0.2%. He spent $8,000 a time researching material that did not apply. He got fired. Okay, like you just, you need to know whether the law applies to you. It's very, very important, right? If it doesn't apply to you, don't read it. Now, where do you find the charging provisions? Okay, you find the charging provisions typically either, so if we've got section 125 sub 1 would be a charging provision typically. We just saw, where was it? Hopefully I didn't throw it away yet. Yeah. Section 123.3, the first thing you see. But what can happen is sometimes the first thing you see are definitions. So if that happens, you skip the definitions part. This is section 123.4, and you get over, and first you find this is sub 2 now. May be deducted from a corporation's tax. That's your charging provision. So all you got to do is have a corporation. If you're dealing with an individual, stop reading. But so we're saying, and again, this, you don't need this section per se, it's just an example. You'll do this next term. But if you have a corporation, there is a deduction available for the percentage times the full rate taxable income. Well, I need to know what the full rate taxable income is. That's going to be now back in the definitions. All right. So sometimes you'll find the charging provision in subsection 2, because if the definitions are in subsection 1, or you find it right away, as we saw. Same thing if you look at section 125, which we looked at for a least of, may be deducted by a corporation. It's a Canadian controlled private corporation. That's a charging provision. It's in subsection 1. Now, generally, I will tell you that if the charging provision, the provision that tells you whether it applies to you, is in subsection 1, then the definitions are in the very end. So if the section has definitions, look to the end. So it's going to be at the beginning or at the end. It's that kind of process that you go through. Okay. Okay. What I also want to point out is in terms of reading the law. Oops. A lot of times the law will deal with fractions. And I want you to know how to sort that out. So what you see here is, if you see, I'm looking at section 126 this time. This is the foreign tax credit. So the foreign tax credit says a taxpayer can deduct an amount equal to non-business tax paid, not exceeding. Okay, so these are going to be limits. That means we're going to limit. And then it says that proportion. Okay, anytime you see the word proportion, that means you're looking at a formula. A proportion is a formula. Or sorry, a fraction. I'm sorry, you're looking at a fraction. And we want the numerator and we want the denominator. Okay, so you want to find those two. Well, the way that works is, as soon as you know it's a fraction, you've got something is of something. So you look for the is of. All right. You don't do anything till you find the is of. So as soon as you see the proportion, go looking. It's always going to be in the margin. Find the is of. Everything that comes before the is of is the numerator. Before the is of. Everything that comes after the is of is the denominator. So just find the is of before you do anything else. Okay? So that's, as soon as you see that word proportion, make sure you realize you're dealing with a fraction and you got to find those words. All right. Okay. Got it. All right. So those are the things that I wanted to highlight just in terms of getting a rhythm to using the ACT. Now I got to spell rhythm. Anybody know how to spell rhythm? I can't remember how to spell rhythm, so we'll just assume that
RYTHM.
RYTHM. Thank you. Oh, Lord. By the way, don't ever trust my numbers. If I'm doing numbers, make sure you double check them because I can add 2 and 2 and get 5 in a heartbeat. All right. There's a rhythm to using the ACT. And so find the charging provision always. That's the first thing you do. Don't use the ACT until you know that. Make sure you're clear on what the words mean. Look for those least of, lesser of, and it's essentially an outline form. So get comfortable with the outline structure and you're going to have to just play with it. Okay, I'm going to stop recording now. That's what I have to say about using the ACT, and hopefully this video will be